Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from January 5th to January 9th, 2026. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from January 5th to January 9th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with Swiss retail sales data and US ISM manufacturing PMI. Tuesday brings German inflation figures including both monthly and yearly data. Wednesday features Australian building permits and inflation data, German retail sales and unemployment rate, Eurozone inflation figures, US ADP employment change, US JOLTS job openings, US ISM services PMI, and Canadian IV PMI. Thursday includes Australian balance of trade, Japanese consumer confidence, German factory orders, Swiss inflation data, Eurozone PPI and unemployment rate, US initial jobless claims, and Japanese household spending. Friday concludes with a major day featuring German balance of trade and industrial production, Swiss unemployment rate, Eurozone retail sales, and the crucial US non-farm payrolls along with the unemployment rate. We'll also see Canadian employment figures including employment change and unemployment rate, plus US Michigan consumer sentiment. This week's key market-moving events will be the Eurozone inflation data on Wednesday and the US non-farm payrolls on Friday. Additionally, Canadian employment data on Friday will be crucial for the Canadian dollar. Now, let's go to the technical analysis. This week, we'll focus on the Australian dollar against the US dollar and the US dollar against the Canadian dollar, as both instruments show interesting technical setups heading into key data releases. Let's start with the Australian dollar against the US dollar. Looking at the daily chart, the Australian dollar is currently trading around 0.6693, showing mixed signals after recent consolidation. The price is currently moving slightly above the 20-day moving average, maintaining a cautiously bullish posture. The stochastic oscillator is moving lower from the overbought area and is currently in the middle zone with potential for continuation in either direction. Looking at important levels, the Australian dollar against the US dollar has support at 0.6587 and 0.6534, while resistance can be found at 0.6782 and 0.6833. Wednesday's Australian inflation data will be important for this pair. The monthly inflation figure is expected to show 0.4% growth with the yearly rate holding at 3.8%. The current position slightly above the 20-day moving average is a neutral to bullish signal, but the stochastic moving lower from overbought suggests caution. If Australian inflation data comes in hotter than expected on Wednesday, it could provide support for a move toward the 0.6782 resistance level. However, disappointing data could see the pair test the 0.6587 support level. Now, let's turn to the US dollar against the Canadian dollar. On the daily chart, the dollar-Canadian dollar pair is currently trading around 1.3730, showing signs of a potential recovery. The price is currently moving higher toward the 20-day moving average from below, attempting to reclaim this key technical level. The stochastic oscillator is moving higher toward the overbought area, indicating growing bullish momentum. Looking at key levels, the US dollar against the Canadian dollar has support at 1.3664 and 1.3595, while resistance stands at 1.3800 and 1.3863. Friday's Canadian employment data will be the most crucial event for this pair. The employment figures are expected to show 40,000 jobs added with the unemployment rate potentially rising to 6.7% from 6.5%. The move higher toward the 20-day moving average is a positive development for dollar bulls. A successful break above this level could open the path toward the 1.3800 resistance. However, with the stochastic approaching overbought territory, traders should watch for potential short-term pullbacks. Strong Canadian employment data on Friday could halt the dollar's advance and push the pair back toward support levels. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Wednesday's inflation releases and Friday's employment data, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.